It's time for Under 30. Alex Coffey alongside Jenny Horn, now joined by George Tsilis, senior markets correspondent for the Schwab Network, to discuss SoFi. We know this is a retail trading favorite, probably because so many of the up-and-coming generation uses these type of companies like SoFi for financial services and banking and maybe loans, but also lower price, volatile name here, George. Some news, though, on the corporate front.
Yeah, I mean, we talk about this one often, and I know it's a sort of a crowd favorite, and we talked about some of the good things and the bad things that have been going on with SoFi. I mean, first off, from a price standpoint, it's actually performed right in line with the S&P over the last few years. So for what it's worth, that's I think meaningful. Over the last year, it's been higher by quite a bit, particularly in the last 6 months. It's actually nearly doubled. So there's something going on with the business, and I suggest I'll talk about that in just a sec. But the news today, what's happened is that the company, and this is across the board what we see with financial companies like SoFi, is that they generally will securitize a wholesale line of credit, and of course they're able to sell that to lenders, and they did secure an additional $525 million deal with PGIM Fixed Income business. This is a large wholesale institutional fixed income company, and what this basically does is it allows SoFi to have some predictability in essentially underwriting loans and actually finding an end market for those loans, so they can actually lock in profits, but at the same time, it's like a revolving line of credit where they can essentially securitize loans and then, of course, offload those loans to major asset institutions like PGIM. And this is actually very creative for this business. You see finance companies do this all the time. So it's nothing unusual. But this also adds to about the $3.9 billion in securitization in Q1 through Q3 that the company denoted when you look at their income statement and, of course, their quarterly conference calls. But I think if you look at the business, and we've talked about this sort of over time, the challenge had really been losses for the company. And, of course, the aspects of financing those losses through share issuances. And now if you look at the last year, particularly the last couple of quarters, the company's actually been moving its adjusted profit targets as well as demonstrating net income profitability, because last year the company did earn $184 million in profits. And that's meaningful because they actually haven't earned any profit since 2017, withstanding that last year. So for what it's worth, when you look at the business as a whole, everything from personal and consumer loans, and of course student loans, that's where they started, but financial planning, insurance, and brokerage, they're creating a comprehensive financial ecosystem, which can create some compelling reasons for customers to stay locked in to their business. And if SoFi can provide value propositions and start gaining additional fees outside of traditional lending fees, this is a company that is gaining traction, because we've always talked about this business as one that is gaining customers and growing its sales, but the problem had always been manifestation into profits. And now it looks like there's a little bit more consistent visibility on the profit front, and therefore we're seeing some nice price actions, particularly since October.
I mean, no kidding. Now today's news also with this $525 million personal loan deal. I mean, just building on the $3.9 billion that they've really secured in personal loan collateral as of late. So that in itself, I think, shows some of the continued demand. But is there any risk now of a new administration? We've been talking to the major banks all week long, and I think that so far what we've heard points to nothing but strength ahead. I'm just curious if there's any pushback to that narrative.
Well, yeah, that's a good question. I think right now the regulatory risk is probably something we shouldn't be too concerned about. Obviously, I think what's happening as well, and if you just look at the patterns with the chart in October, the stock had moved higher, or since then, but so is the 10-year yield. So right now, I think because the 10-year yield is rising, and it's been doing so since the Fed announced their first rate cut in late September, now that's widened out the net interest margins for SoFi. So therefore, I think one of the risks you have to keep in mind is if we start to see the yield curve compress or the long end of the curve start to move down relative to the short end, that can present perhaps some price challenges for existing investors.
Yeah, and I think a good place to leave it. And a nice move today, despite the overall market here being lower in the 4 major averages. We've seen some of this downward pressure pick up, but appreciate it. George Tsilis, senior markets correspondent for the network.